Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is Thursday, May 9th, 2024. We have the initial jobless claims coming out higher than expected at 231,000. The expected was 214 and the last was 209,000. We're going to look a little deeper into charts regarding initial jobless claims. And next week we have CPI and PPI. Initial jobless claims. This is a Fred website, you can look it up. Initial claims is what it's called, the chart ICSA. And I just want you to note, chart goes back to 1970, and all of the gray bars are where recessions happened officially. And as you can see, when you have higher lows on this chart, so when the blue gets as low as possible, and then we go up, when the bottom goes up and up and up, all of a sudden, recession. Again, when things are doing okay, this is going lower, low, lower, low, and then you have, just like in stock patterns, when you have a higher high, higher low, it means that it's the trend until the end. It's the trend until there's a recession in this case, and so you have higher low, boom, recession, and then lower low, everything's fine. Higher low, boom, recession, higher low, boom. It curls up slowly and then all of a sudden explodes up higher. In 2000, we had from the bottom, it looks like was the week of April 15th, 2000, and from that date, higher low, boom, going up to the moon. Zooming in now to more recent history on this chart. For now, we're starting to see a pattern. Now, granted, all right, you may have seen this higher high, or higher low rather from 2022 until it looks like July of 2023, and you could have argued, look, higher high, higher low, and then we went down lower, and so this isn't perfect, but right now, since the end of 2022 to the beginning of 2024, we have a higher longer term low, and then more recently we also can see that we have higher low, and very recent history, higher high. And so the question is this going to be ticking up and up and up? Maybe not. I mean, when I look at the unemployment rate, that's the one that worries me the most. It's one of the more sturdy, initial jobless claims can go all over the place for all sorts of reasons, but the official unemployment numbers and also underemployment numbers, the U6 that we talked about in a few shows back, those climbing up, that's what allows me to be more confident in the bearish case for stocks, only because I think there's a recession coming, and I think it's coming within a year from now, at the maximum at this point. I actually think it'll come sooner and faster than that, but who am I? I'm only the guy with the crystal ball. Looking at a daily chart on the S&P 500, I noticed that, this is looking bullish, and I found what looks like perhaps a wedge moving up here, and so yes, it's possible it'll break lower, and this could even be a top, but I can't bet money on it, and I can't say that I can't say for sure any longer that I think that we're not going to go to new highs in the S&P 500. As dumb money can get, it can always get dumber. That's an important thing to remember. I'm going to add to this whole diatribe that, remember, the Fed still has its hands on the neck of the economy trying to slow it down. The yield curve is crazily inverted. Unemployment is going up. People's bank accounts are going down. People's credit card debt's going up. The cracks are here. The problems are here. That's why I'm calling it dumb money. I mean, but, you take a look at HYT, high yield corporate bonds. A lot of these bonds pay over 10% yield, and those yields are going down. This is risk on. chart pattern wise, this is a wedge, and we could break out of this lower. In fact, it looks to me, I believe we will, if we have another big green candle in HYT. I think I might eat my hat, as the phrase goes. But at this point, I already didn't expect this much strength in the markets, and here we are. Moving on to the Fear and Greed Index, we're verging between fear and neutral. I mean, it looks to me like we are headed into neutral, maybe even greed here, but I don't fully know that. The VIX I mentioned yesterday, Gareth Soloway, I believe on his show, said that he was buying the VIX yesterday, and I was thinking, like, why? What, again, yeah, I agree with him and a lot of other people that, this looks like the end here, but things can get dumber before they get smarter. I mean, and the truth is, with the yield curve inverted still, we don't typically see actually a peak in the stock market until it uninverts, because this is just what happens. Things are slowing down, things are getting bad, and people realize that the Fed's going to lower rates, and so the whole curve drops, rates go down, money becomes easier to borrow, and it automatically lifts all ships. It automatically lifts the value of stock valuations, and so it's not just dumb money at play here, but the game of musical chairs really has begun, and for now the music's playing. Here. The VIX is still breaking down. There's no fear here. Adding to this no fear, XHB Home Builders Index had a giant green candle today. This looks very strong. And additionally, in the triple Qs, QQQ, this is the NASDAQ, I'm starting to see what looks like it could be perhaps a head and shoulders pattern. Granted, the right shoulder is very small. Breaking through this can, if the pattern plays out the size of the head, we should break out to, in QQQ, maybe to 470 here, which, I might end up eating my hat tomorrow, but maybe the stock market is sniffing out these lower rates coming, along with unemployment, all these numbers going higher. Again, rates are allowed to fall, giving automatic lift to the markets. And you take a look at the 10-year note, I have been saying, I think this is it. I think this channel, Gareth has talked about this as well on his show, I think this is the end here, and I do think we're breaking down here. And so maybe the stock market is also seeing this. Again, so today, this is a large red candle, and it's engulfing the past 3 days. This is a strong move, and this could be the kind of move that ends up breaking down out of this channel. And so tomorrow, for me, is, finally markets are getting a little interesting and a little exciting. For me, if the 10-year does break down out of this channel, I mean, that's big. This channel's been pretty sturdy since the end of 2023, and so if we break down here, I don't know how low it will go. I imagine we might get near, at least halfway down from the beginning of this channel, at the very least, if not, much further. Again, as the smartest money out of the monies, right? You have the treasury bond market. The treasury bond yields is like top smart money. And, when this starts seeing, yes, unemployment is going up, yes, things are slowing down, the yields can go lower and lower here. And so for someone that, like me, has basically 50% exposure to long bonds, that will play out wonderfully for me if that happens. And that's all I have for today's show. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.